Welcome everyone to another episode of the FinMeUp podcast. Of course, this series is Stock Savvy, where we discuss a single stock more in depth. Oftentimes we hear people drop golden nuggets. You read something here, you hear something there. But I feel there's a demand for us just sticking to one single stock and getting to know the company a little bit better. So today we're joined by Josh Viljoen. Josh, of course, is a mentor on the FinMeUp app. This guy is a CA by day and like a financial analyst, expert, content creator by night. It feels like he has 36 hours in his day where the rest of us only have 24. So Josh, super welcome. Great to have you on the show. Before we start with today's company, which of course is Sabvest, I'm looking forward to hearing your thoughts there because I am not really a fan of holding companies. So today maybe is a day where you convince me otherwise. So very, very keen to hear your thoughts there. But before we get into that, just tell us a little bit more about yourself and how you got into the investment space.
Cool. Paul, thanks so much for having me on the podcast. It's great to be in, to be able to chat to the FinMeUp listeners. And just a little bit about myself. I'm a chartered accountant trainee in my final year. So I'll qualify at the end of this year, and then it's onto the big wide world. And just a bit about myself. I have a strong passion for the markets. I think I first made my first investment when I was 18. I'd earned some money doing a holiday job, and my friend's dad was a financial advisor. So I kind of just asked him, listen, where do I put this money? And he kind of got me set up with a unit trust. And since then, I kind of took more of a keen interest in actually managing my own money and buying individual stocks and understanding what drives a business and how to actually allocate capital. And I guess outside of stock picking and work, some of my interests are big sports fanatic, love playing sports, an avid golfer, enjoy any ball sports, some paddle, some tennis, some squash, just anything to keep me fit and active.
Awesome, yeah. So I'm a financial advisor myself, and you being a CA, it's always funny when I have CAs as clients because CAs are very, very conservative investors. I think it's because you audit the financial statements and you see like what can go wrong. You can come up with a million reasons of what can go wrong instead of maybe identifying what can actually go right. So I always have to tell the CAs, listen, maybe we can just up the risk factor a little bit. I'm not going to lose all your money, I promise. But anyway, okay. So Sabvest. Sabvest is a holding company. It's like almost like the Berkshire Hathaway of South Africa, but it's only a lot smaller. So that's my 2 cents about the company. I don't want to spoil your presentation. So tell us just the Sabvest 101. Give us the 2-3 minutes overview.
Cool. So Sabvest, like you mentioned, is an investment holding company. And essentially what an investment holding company is they are an allocator of capital. When you buy into Sabvest, you are basically giving your money to someone else to allocate that. You're not buying into a single company like buying into, let's say, ShopRite. You're buying into a holding company that has investments into other companies. So like you mentioned, Berkshire Hathaway, that's a great example. So when you invest in Berkshire Hathaway, you're essentially entrusting management, and in this case, Warren Buffett, arguably the best investor of all time, to allocate your capital accordingly as he sees fit. So when you invest into Sabvest, in this case, you are entrusting Chris Seabrook to allocate your capital. Chris Seabrook he's the CEO of Sabvest, and he has an excellent track record at the company. He also sits on the board of various JSE listed companies, including Brait, Massmart, and Transaction Capital. Important to note that Chris Seabrook is also the majority shareholder of Sabvest. So he actually holds 40.5% of the company through the Seabrook Family Trust. So that's something I like about the business, that when you're investing in Sabvest, you are essentially investing alongside Chris Seabrook, and wherever his money is going, your money is going. So there's a strong alignment between management and between shareholders, because most of his net worth is tied up in this company. So it's almost like a family wealth office in that sense, given that he is the majority shareholder.
Yeah, that's always super bullish. I mean, if you're trusting this guy with your money, but if you're going down, he's going down with you.
Yeah.
So he has a direct incentive to grow your wealth. So that is super bullish. And of course, if you're a retail investor and you just go on easy equities, you're maybe a student or a doctor or an engineer, so you can back yourself to invest, or you can now back him to invest on your behalf, and he's of course the expert. So off the bat,
Yeah.
automatically I'm thinking, why would I do it myself if I can give it to Warren or Chris? So of course there are reasons why you would not necessarily give it to them. That comes to valuation and the multiples and so on. But before we get to that juicy part, just tell us about the makeup of Sabvest. So not all the companies in Sabvest, they hold about 13 companies if I'm correct. Not all of those
Yeah.
companies are known listed companies.
Okay. Yeah. So, like you said, they hold 13 companies. I'll chat briefly now on the companies that make up the biggest piece of the Sabvest pie. So, like you said, there's 13 companies, 10 are unlisted, and 3 are listed. In terms of Sabvest investment mandate, they focus predominantly on industrial and service businesses, and what they often look for is businesses where family and key management personnel are kind of co-invested. So similarly, like with Sabvest itself, Chris Seabrook is the majority shareholder. There's kind of alignment between management and shareholders. So Sabvest look for something similar in the companies they're investing in. So they like founder-run businesses, family-run businesses. So I'll chat briefly on the 3 largest holdings in the portfolio. So these 3 companies make up roughly 58% of the portfolio, so just over half. So the first is SA Bias Industries, which makes up 21% of the portfolio, and this company in itself is a holding company. So there's 2 groups that sit under SA Bias Industries. The first is Narratec Group, and they're a local manufacturer of narrow fabric brace products. So essentially what that is things like, let's say, fabric tape, or fabric strapping, or even like elastic that goes into clothes. So those kinds of products. The next is Flomax Group, and they're a UK-based industrial holding company. So that's a brief summary of SA Bias Industries, which makes up 21%. The next is DNI 4PL Contracts, which also makes up 21%. And what they do is they provide technology, logistics, and distribution services to the telecom industries and network operators in South Africa. So they do things like SIM card starter packs. So for example, if you had to go to Cell C and buy a SIM card, you often see those like little packs with the SIM card and the starter kit. That's the kind of thing they do, as well as the actual distribution networks of airtime and physical cell phone handsets. So it's similar to almost a company like a Blue Label Telecoms. So they compete in that telecommunications industry, and they also have some logistics. So that's DNI 4PL, which makes up 21%. Then lastly is ITL Holdings. They make up 16% of the portfolio. ITL stands for Intelligent Labeling Solutions. That's ITL Group. And they essentially are a market leader in apparel labeling and identification products. So, for example, if you go to, let's say, Polo and you buy a sweater, they would, let's say, for example, make the labels of that product, the tags on the product. And then they also have supply chain management solutions, as well as RFID kind of tags. So, for example, if you see clothing often have those tags on them. So, for example, if you try to run out of something with a shop, it'll beep unless that tag is taken off. So it's those kind of products. So, that's a quick summary of the 3 largest companies in the portfolio, all unlisted. The listed pieces of the pie make up a much smaller portion, but majority of the portfolio is unlisted companies.
Great. There's a lot to unpack, and I'm keen to get into it. But there's just quickly for the viewers and the listeners, the 3 listed companies, they might obviously know these companies. I know one of them is or was Transaction Capital, which of course was, I don't want to swear on this channel, but it was a massive.
A few moments later.
Blow up last week in the
Yeah.
financial markets. Probably the biggest news in the financial markets was Transaction Capital took a massive hit, and so, but it is a small portion, so it didn't affect them that much. And then the other 2.
So the other 2 is a company called Carrero Network Security. So that's a UK-based cybersecurity company. Also makes up quite a small portion of the portfolio. and then the next one is Metrofile, so that's a JSE listed company, and they provide document and data storage solutions. So file management solutions for business, actual physical like storage of paper documents, those kind of things. So yeah, and like you said, transaction capital was the other one. Big caused a lot of waves in the financial markets. I'm sure many have seen a lot of hot takes on Twitter about transaction capital. Sabvest actually did sell some of their position last year in December, and I think and in January as well. So I think management clearly also potentially saw that maybe the stock is a bit overvalued and decided to trim their position, and then they actually rebought in again after the crash, I think at 11 Rand. So we'll see how that one plays
Wow.
out. But
So yeah, it's not every day you get the timing right like that. That's actually amazing. Because
yeah,
I didn't actually know they timed it that well. So they sold it at basically 35 Rand and they bought it now at what, 8 Rand, 9 Rand, 10 Rand. That's amazing.
yeah,
So
I think around 10 Rand. They didn't sell
yeah.
their full position. They sold a portion of it, but then they rebought in lower. So I think management also are quite in tune with the valuation of the companies that they're investing in and know when to trim positions and add to positions.
Interesting. So, okay, so I have a lot of questions, but let's just stick to a few. So, for the first 11 and a half minutes of this podcast, everything seems amazing. This guy knows what he's doing. He's made us a lot of money. I mean, for those of you who don't know, Sabvest has performed really, really well over the last 5 years. They took a little bit of a knock the last 2 or 3 months, but I mean, compared to the rest of the stocks, given that we are in a recession, they are holding up very, very well. So my first point of critique towards this company is I think it's roughly 90% of these investments are unlisted. And
Yeah.
we know very, very little about these companies. So it's like a WhatsApp update almost. Like I know
Yeah.
one paragraph about that's what's available. So there's no way for you to actually value these companies. So it's a matter of trust. You must trust Chris and his team to allocate capital effectively. You can't really do it yourself. That's true, right?
Yeah.
Is that a problem for you?
For me, I wouldn't say that's a problem because if I'm looking at buying into a holding company and it has mostly listed assets, I could just go buy those assets on my own. So I actually see the fact that the portfolio is mainly unlisted as quite a benefit to shareholders because Chris Seabrook is effectively giving retail investors like you and me access to these smaller private companies that we would not necessarily normally have access to, because typically to buy into a private company, you either need to be, let's say, a venture capitalist or an angel investor with a lot of wealth behind you. So it's creating accessibility. But like you said, retail investors might not have the information to understand these companies and to have all the insights. So you are trusting management. And I think that's very important when investing in a holding company, is you are essentially entrusting management to allocate your capital. So I think trusting management is also almost more important than your view on the underlying assets, because those assets can chop and change at any point in time as management see fit. So you almost more need to focus on the management and how they're allocating capital, and is their focus the industries they're looking in, does it align with kind of your investment goals, more so than the underlying investments.
Yeah, that's a brilliant answer. So it's actually not a bad thing. Like you're getting exposure to the private market, which you would never have gotten yourself, and you're giving it to someone who has a massive stake in the company. He knows his business and he's proven it. He's proven it over the last how many ever years. So okay, thus far all the boxes are still ticked. You're doing quite well. I don't have Sabvest. Let's chat about that. You obviously, just full disclosure, you're a shareholder, right?
Yeah, I have a share in Sabvest. I recently bought some more as well, I think last week. At I think it was 75 Rand a share, or just under 80 Rand. I thought that was an attractive entry point, so I've recently added some more to my position as well.
Yeah, interesting. So on that note, so let's get to the valuation. So for just for the listeners and the viewers, there's this thing in investment holding companies where they sell at discounts, and what that basically means is if you add all the valuations or the value of every company within that holding company, let's say that gets you 10 Rand a share. Now, so in other words, the holding company should trade at 10 Rand a share if it's a sum of parts, but it rarely does. It's always at a discount of about, let's say, 10%, 20%, even 30 to 40%. So you would then buy the holding company for 7 Rand instead of the supposed value of 10 Rand. Is that the case? Do you know in Sabvest's case? I know it's difficult to value because it's private companies, not public companies. And then, okay, so let's answer that first.
So that is the case. Like you said, holding companies typically will always trade at a discount to NAV or net asset value. For the listeners, essentially what your net asset value is if you look at the balance sheet of a company, it is the assets minus the liabilities. That is your net asset value. I'm not going to get too technical into determining how you determine what an appropriate net asset value is. Keith McLaughlin actually did an amazing webinar with Simon Brown. I think it was earlier this week or last week, covering holding companies. And in that, I would really recommend everyone listens to it. He explains how you go about determining what an appropriate discount to NAV is for a company. And ultimately, it's kind of a function of what are the management fees in relation to the NAV. So there's kind of, you can, as well as the holding structure of the company, there are a few technical bits, but essentially my view for Sabvest is that an appropriate discount to NAV would be in the region of, let's say, 15 to 20%. So that's kind of where I view an appropriate discount to NAV. And then looking at the valuation, with holding companies, that discount can widen or shrink as the share price moves. So I think with a holding company, it's often good to look to buy when that gap becomes a bit wider, when you think the current discount to NAV is a lot bigger than what you think is an appropriate discount to NAV.
That's very technical and very, very interesting. I think I will definitely listen to that podcast because that's something that's always bothered me. Because there's a few brilliant holding companies in South Africa, or there used to be, and also in America, and I never know exactly how to value these companies. That's one of my main critiques towards holding companies. Right, so let's chat about the valuation. So Sabvest is obviously still very small because most of the holdings are private companies. So I think the market cap is about 3 billion, if I'm not mistaken, 3.7 or something.
Just under 3.
And so tell us about the valuation and also the main metrics that we're looking at the moment.
Okay, so in terms of a holding company, share price essentially we expect to track net asset value, and in the case of Sabvest, that is often the case. So when you're looking at a holding company, it's very different to looking at a normal stock where you would look at your PE metrics, your EBITDA metrics, price to free cash flow, because a holding company is essentially very balance sheet heavy. They don't have typical revenue streams. They have fair value adjustments on these investments. So essentially the key metric in assessing a holding company is growth in net asset value per share. So to just give you some of the key metrics, on a 15-year basis, NAV has compounded at 17%. On a 10-year basis, NAV has compounded at 19.5%. And over the last 5 years, NAV has compounded at 16.7%. So incredibly high rates of return. And the share price has essentially tracked quite closely to that net asset value. So essentially, based on past performance, if we can assume the NAV growth is going to continue, which is obviously uncertain, essentially that's the expected return you can kind of get. So if I think Sabvest is fairly valued today and Chris Seabrook can keep compounding NAV at 17% a year, then I can expect to get a 17% return. But again, historical performance is not necessarily indicative of future performance. But I think a 15-year track record is quite encouraging, and it's quite a long period to show consistent performance.
That's exactly true. That's Josh, I'm not going to lie to you. I'm more convinced than what I was before we started. So let me give you an opportunity. So just off of this podcast, I'll definitely go and do more research because you've given me some serious food for thought. I give you 30 seconds. Why should I buy Sabvest?
Okay, so I would say that is twofold. So firstly, we spoke about the growth in NAV that we've been able to achieve over the last 15 years, which is significantly above inflation. So management actually, they target a NAV growth of inflation plus 10%. So that's much more than indices typically return. So they've shown very high growth in NAV historically. And secondly, that discount to NAV has currently widened because, as you mentioned, the share price has sold off a little bit. So for me, if I buy the share today and that gap in NAV shrinks, I can get a return from that shrinking in discount to NAV as well as the NAV compounded growth. So the return you can get is almost twofold. So it's currently trading at a 31% discount to NAV, the share price. If that gap, let's say, shrinks to a 20%, which I think is a conservative, reasonable discount for it to trade at, then you're already getting a 10% return on that normalization of the discount to NAV before any growth in the NAV.
Cool. And of course, for me, just getting exposure to those private companies doesn't seem like a bad idea, especially given that this guy has done exceptionally well performance-wise, growing my wealth as a shareholder and giving me exposure to solid private companies. I'm sure there's a lot more to it. I mean, we can probably sit and chat for 3 to 5 hours about all the bullish cases and all the bearish cases. But I think 20 minutes suffices. This was really, really good. Thank you so much, Josh. Thank you so much to everyone who's watching the YouTube video and listening to the podcast. If you would like to see more of this, more of Josh, I'm going to see more of Josh. I think today he proved himself. I'm going to have a chat to him afterwards. And also which companies you would like us to cover next. That would be amazing if you can put that in the comments. Like and subscribe really goes a long way in growing the channel. Thank you so much, guys. Thank you, Josh.
Thanks, everyone. Thanks, Paul.